Good morning, everybody. This talk about shifting landscape, it reminds me a little bit of going to see a roller skating kind of competition. If you're sitting in the audience, it all looks like fun. But if you're out there and you're getting pushed around, it's a little more challenging. So today, we're very fortunate to have three of the executives who are on the front line of the industry. We have Ayman, Asfari, and I'm not going to go into details because you have them in your catalogs, but he is the founder of one of the most important service companies and very successful, and he will share some of his insights. We have Franco from E&I. E&I is, of course, a pioneer in many of the exploration successes that we're seeing in East Africa and elsewhere. And we have Charles from Expro, who are very deeply involved with the deepwater activities, one of the most expensive and risk-prone section of the industry. I just want to take a few seconds to talk about what are the challenges that they're really confronting. So this first chart is from the combination of the Energy Information Administration's forecast. It was just put out in May, so you can see how they anticipated prices to be coming down, but not quite. This is now optimistic. What they were looking at was an average of maybe bottoming at $91. In fact, we're running well ahead, much lower. But the challenge here is that at the same time, the demand for oil is growing, and it's a sustained growth, very ambitious growth. By 2040, OPEC is alone expected to add 20 million barrels. So we have a bit of a issue here of how do you finance this growth when you are looking at prices are getting softer by the quarter. Also on the top, you have some numbers. If you produce this kind of oil over this period, you're going to consume over 1 trillion barrels of oil. Where are the reserves going to come from to replace this production? So it's a dual issue. It's capacity, but also reserves replacement in the face of volatility in the prices. I'll just use this one more slide. This shows you the histogram of capital investments in the upstream. This is from Barclay Capital. And what you can see is that the investments in the upstream are doubling in the last 6 years or so. There are anticipations that by maybe the end 2015 or 2016, if we are to sustain this kind of production, we're looking at $1 trillion investment, capital investment, not looking at operating costs. On the other hand, as you can see, both the oil and gas have not grown to the same level. So soft prices, strong demand in the long term, volatility, roller coaster, but not the kind of level of increase in production and supply that the long-term outlook predicts. So without much further ado, I'm going to introduce the speakers, give them a chance to tell you how they perceive this outlook, and then we'll try to see what is on their mind as they look at these challenging forecasts. So, Ayman, can you start, please?
Okay. Thank you, Sadad. I think, I mean, with the big correction we've seen with the oil prices in the last few months, my view talking to our clients is as a service company, we have about 30% of our business from operations budgets. And we are seeing the operations budgets for all our clients being intact. If anything, they're growing because of the increased difficulties in managing assets, the UK here with the integrity issues and so on. If you look at the capital spend, the last couple of weeks I was in Kuwait. I met the heads of the NOCs in Kuwait, Abu Dhabi, and I was in Malaysia the week before. I think the NOCs are sticking to their plans. They have a cost structure, particularly in the Middle East, which is very competitive. In fact, I think talking to many of them, they see this as a fantastic time to invest because you're going in for a 30, 40-year project when hopefully you will be able to achieve better cost structures because of the cuts elsewhere. Even the IOCs, I think what we've seen with the IOCs is in many cases under the PSC structures, you are pregnant with developments because you have to meet commitments, and under the PSCs also, you're not as vulnerable because you're recovering your cost in many cases. Where we are seeing a massive dislocation in the market is with the independents, with the smaller players, particularly players that are highly geared, that had reserve-based lending. And we're seeing, so some of the investment activities for new projects in the UK would certainly be impacted. Absolutely, I agree with everything that was said about the shale oil and the unconventionals in the US. The issue there is you can turn it on and turn it off. I was talking to a big producer last week, and he was saying the cost structure is anywhere between 45 and 95, even in the Eagleford. You have zones in that produce at 45, so you can shut off production from certain areas and you produce from other areas, and that's a very, very flexible versus many other places around the world. My big worry about, I come back to what His Excellency Abdullah said about the panic, is we are in a long-term industry where we have to take views for the long term, and I feel that the macro for the industry that we are facing, which is the growth in demand ultimately, the fact that we are collectively facing the challenge that the costs are rising, and the costs are rising not because we make more money as a service contractors, we're making less money this year than we made last year, but because we are collectively producing more and more difficult molecules. So the level of difficulty in the industry is increasing. And the challenge of producing these additional molecules is increasing. And this is why this chart shows that we're increasing CapEx, but we're staying still with our production. And that really is the challenge that we are collectively facing. And I'm saying all of us, it's the service companies, it's the oil companies, the IOCs, the NOCs, the independents, everyone in this game is facing this very challenge. And what worries me about this outlook with the dislocation, with cutting investment, is for instance, for us, we have to continue to attract talent into our business. We have to continue to show that our industry is an attractive place for the next generation, for the next 40, 50 years. And we go through these cycles where it is doom and gloom today. So, for me to bring in a top engineer from Imperial, he says, well, you're in a sunset industry, prices are down. When in fact, really, our technical challenges are increasing, and we need more than ever more talent for this industry. We need more capability and more resources. I come back to the difficulties. My view is that what is underlying a lot of the issues that we're facing today, and the big opportunity for us to do better, is by continuing to enhance the capability. There are not too many industries that can withstand an oil and gas availability in the North Sea, which is around 60%. This is what we have today in the North Sea. If you're in an airline industry, you'd be bust. You operate at 99.9%. We have 40% slack in the North Sea. The same thing about capital projects. Most of the capital, how many industries can afford to have a project triple in price or quadruple in price and be delayed several years? It happens in the oil and gas industry, and it is happening repeatedly. More than 70% of the projects are experiencing cost overruns and delays on projects. And in my mind, the core issue is competency and capability. Really, it is competency because we are always being pushed to do things where the industry is not prepared. And a big reason for this is we're not taking a long-term view. We're not addressing the issue that we are going to continue to have this challenge of having to deliver more and more difficult hydrocarbons, whether it is deeper water, whether it is HPHT, whether it is tight gas, whether it's any of this. We are going to continue to face this challenge. And we have to realize that these challenges are going to increase and not decrease. And we have to be able to have the capacity and the capability to do this. This is my big concern about everyone that's talking today about the decline, that we're taking a short-term outlook and we're not investing in capacity, and we're going to find ourselves later on in a situation where we are going to make the same mistakes, we're going to deliver projects delayed, we're going to have low availability, we might have industrial accidents like Macondo. These are all symptoms of the fact that we are being pushed to the limit with the capacity and the capability in the industry.
Well, that's very helpful because the answers are going to come up from the producers. And how's E&I dealing with these challenges? The cost overruns, the duration.
Thanks. Good morning, everybody, first of all. Yeah, relating to the global topic of this conference, shifting landscape, yes, it's true. Prices is changing very rapidly. On the other hand, big shifts are hardly news. Meaning the industry faces news and uncertainties with a constant stream, whether it is price or technical issues or political issues. A couple of comments on things that Eni is trying to do in order to shape our strategy and our actions to be resilient to these changes. First point I'd like to make is that we make it a point to explore for conventional resources. And this both as a lever to increase our long-term value and as a lever to do short-term contribution to our results. In the past years, the industry has increased its resource base. Many majors have increased their resource base by buying into unconventional assets. First tar sands, then shale gas, then shale oil. Eni went looking for conventional resources, and we made some extremely good discoveries, e.g. Mozambique, or our stream of oil discoveries on the coast of West Africa. In the years from 2008 to 2013, we found 9 billion barrels equivalent of resources, which I think in our mind proved that our decision was correct. This is not just a way to build our long-term future with long-term thinking. We like to have a relatively large share in the permits we explore before starting exploration so that we can farm out after de-risking the prospects. And to us, this is a way to generate healthy supplement to our operational cash flow. So exploration is the first point to us. The second point is actually fast and efficient project development. We think we have a good portfolio. It's a relatively large number of projects, typically medium-sized and typically conventional, which means that our risks are spread and this is economically efficient. Our average break-even price for new production is in the order of $45 per barrel. Nevertheless, putting projects in line, on time, on cost is a challenge for the industry. This has many reasons. We are concentrating on one that we think we have identified. Over the past decades, we think that the industry outsourced too much of its critical capabilities, especially in project development. I'm referring to initial engineering as an example, or to project management. So what we are trying to do as a core of our action is actually to what we call in-source back these kind of competencies that we think are key in order to keep control on projects which are more and more difficult, with more and more complex arrangements with contractors. So that's a second point. Third point I would say is technology in a broader sense, meaning Eni likes to develop projects that we know well in geological terms, in technical terms. This is why we tend to concentrate our production and our developments in a relatively limited number of hubs which have similar characteristics. That said, we like to gradually push the boundary of what we can do by adding technologies. I think there are two cases in point. One is deep water generally. Like in the next months, we will put online our first project in Block 1506 in Angola. First project will be 44 months after FID, so it's a quite competitive development time. And this is pushing what we can do in terms of deep water developments. And another project I'm involved with directly is Goliath in Norway. This is a lot of firsts, like it's the first oil project in the Barents Sea. It's the first large-scale application of a cylindrical FPSO concept. It's the first project which is mostly powered from shore with a 100-kilometer undersea power cable. It's also a project that forced us to, think and develop and learn new techniques, as an example, to operate, to guarantee safety, operating in the polar night. It's a project that even pushed our boundaries in terms of what we do in terms of sustainability. Like we involved a lot of local fishermen in our oil response, spill response plan, as an example. So these are among the examples of the ways we try to increase the boundary of what we can do as a company. So these topics, most are general to the industry, although we think that on some of them we have a quite unique twist. So if I have to sum up, exploration, conventional exploration first, strong attention to fast and efficient project development, and selecting a few technology themes that build your capabilities over the long term. results, we have in our plans that this is going to add 500,000 barrels per day in the next 4 years to our production base, and also give a strong contribution to our cash flows, which is a challenge for the whole industry.
Okay, let me, before I go to Charles, Ayman, you talked about the impact and duration of this downturn, the attracting talent, the financing of the future. Franco, you're talking about deep water, East Africa, West Africa, frontier regions. Now, Charles runs a business that has to deal with all of these uncertainties, and he's in the deep, ultra-deep water, among other things, and he has to live with the reality of a 20% or 25% drop in oil prices. He has to fund his operations. He has to deal with the companies decide to defer drilling from this year to next year and then maybe the year after that. How do you deal with all of that, Charles?
Well, I mean, it's not the first time we've been through this, and I think certainly all of us in the room have seen these cycles before. So, I mean, from a service company perspective, you try and build as much flexibility into your cost structure as you can up front. We're certainly at an inflection point, and when it comes to, for example, budgeting for next year, obviously the question is what happens now. Most of the deep water projects that are sanctioned, that form the bulk of our backlog, were sanctioned at economic levels that were at or below where we are today. And I think it's really too early to call or too early to make an assessment of the impact on those projects. But in terms of discretionary spend, pressure just overall on supply chains, it will inevitably come. We've all been through this before, and we can see, essentially what happens. I really second Ayman's comments. I mean, the challenge in that really is, in terms of the deep water space, the risk of operating, the cost of operating, the time it takes to build competency in that space, it's a long-term investment. And, needless to say, looking at next year, the year after, recruiting plans and so on and so forth, it's a challenge to get visibility at this point on, quite how that responds. And in terms of attracting the right talent for our industry, and we've built our business around that track record, around that high level of competency. And that certainly provides, us with some, careful food for thought at the current time. A lot of it depends on, what a lot of our customers are going to do. And it's really too early. I mean, the last 3 weeks have been fairly tumultuous in the markets, and I think it's anybody's guess, really, to try and triangulate forward from 3 weeks of the volatility we've seen, quite what happens next. So, our view is that, we watch it carefully, be close to our customers, talk to them and try and understand what's happening. And already we see some divergence between the NOCs, just as Ayman said, the NOCs taking a very long-term view, and what is likely to be a more short-term response from the independents and the IOCs.
So you see a big difference between the NOCs. Are they more long-term? I guess in line with Dr. Badri's comments.
Generally speaking, yes, but that's more something that we've seen in other cycles too. I think really this, where we are today, it's too early to call. In terms of where we go from here.
Ayman, at what price level do you start changing your plans? I mean, we talked about, is this a floor? Is there yet more downturn from where we are? At what level do you start rethinking your business?
Well, actually, Sadad, we're in a very fortunate position. We have the highest backlog ever, north of $21 billion. We're expecting some more business before the end of the year. We're very busy, so this is against the backdrop, so we're not changing our plans at all. I think the issue for us is our ability to continue to attract the best talent. We hire 400 fresh graduates a year. We have an academy. We want to continue to tell them that this is an industry that is very exciting for the future. Unfortunately, these cycles have a very big psychological impact on sometimes bringing the best talent. But we are in it for the long term, and I absolutely believe in the macro. I think the fundamental issue that we have is we have an oil price which is flat at best for the foreseeable future, and we have a cost structure which is going up because I genuinely believe because we're doing more and more difficult stuff. So the two things are getting into a situation for investors, particularly the IOCs. The rates of returns on capital employed are shrinking. The rent in the system is going away. The only way that you can avoid this is to work better, smarter, more efficiently, and work in a much more collaborative manner, with the IOCs, with all the majors, to address this challenge. But the issues that we talk about, which is cost overruns, which is availability, safety mishaps, are challenges that we all collectively face. And the symptoms of these challenges, when you have a cost overrun, is you don't know what. Frankly, you made a mistake in the initial projections. It means it is lack of competence. So, I'm not saying we're the most competent. I'm saying we're suffering from the very issue. But we need to set standards for our industry, which are much, much higher than the standards today. And the slack in the system that we have been able to have, where we can carry on operating at, without having, efficiency in mind, and with costs being exceeded and being masked by higher oil price. I mean, I can tell you with the IOCs, if you run the economics on the projects when they were FID'd at the $40 and $50, and you were to assume the cash flow of the companies, everyone would be underwater. What has masked the inefficiency is the fact that many of these projects were FID'd at the $40, $50, $60, and then the oil companies enjoyed $90, $100. If you look at the investment case on every one of these, I wouldn't want to say every one because maybe some have, but many of them will be totally challenged. Now, going forward, if you're taking a view that we're not going to have a price which is going to go from 90 to 150, it means you have to deliver projects on time, on budget. You have to achieve high level of availability. You have to execute much more efficiently. With a background where we still have a long way to go, and we still need to build a lot more competency, and certainly a downturn like this and this psychology, which is not going to allow us to attract the best talents, it's going to impose a lot more challenge, and it's going to be a lot more difficult to meet what we have to achieve.
So the margins are shrinking.
Absolutely.
And therefore the risk when you finance these projects going forward is growing. And who's carrying that risk? I guess it's the IOCs and the NOCs. How do you deal with that? You can't hedge forever. How do you deal with that?
No, as I was saying earlier, well, I think there are many things to be said. Meaning, first of all, is that IOCs, have started to seek for more efficiency in their capital investments before the recent price crisis. This is what you have been seeing, all the IOCs communicating in a different way, but for the past couple of years at least. So I basically agree with Ayman, meaning there's space to do things better. As I was saying earlier, we take our share of responsibility, meaning we think the IOCs ourselves should start by doing something better in-house before going out and looking for contractors to execute the project. But it's a shared space. The pressure will come to the whole industry, so to both sectors. And I guess a lot of the improvements that can be made are based on the interface between the IOCs and then the companies that realize the projects.
Charles, do you see that as a problem? Is the communication open between
absolutely.
contractors?
I've been in the service business for 20 years, and I think there's huge room for improvement just in the way that, that interface, the tendering, the way, it tends to be, and not just in the current environment, but all the way through it. There's such a focus on one particular number, which typically is cost. And, as a way of quantifying performance, let alone productivity gains further down the track or the use of new technologies and so on and so forth, I think there is a lot of scope for improving that interface. And a lot of it comes down to, how we tender for services. In many cases, it tends to be a case of lowest common denominator in terms of technical qualification up front, and then it's a pure price target. And I don't think that is the right model for our customers, or indeed for us on the service sector. But a lot of it, it starts there. That is the often the interface that can be improved.
All of these new technologies that came out of the fracking and the horizontal drilling and so on, did they have an impact on cost globally? Not just in the U.S. Have you seen the benefits in the offshore or in remote areas?
Specific to fracking, you could argue that, for example, the horizontal drilling technology, the directional drilling technology, in many cases originated from the offshore markets and then, moved to the land markets and was one of the key enablers along with pressure pumping. So I think, the movement of technology between the various parts of our business is quite successful. But I think the interface between us and I mean, at the service sector by and large, and our customers, and how our services get tendered and priced, still has huge room for improvement. And one would hope that in the current environment, that is, a conversation that we can continue to have. I mean, just performance, for example. I mean, many of our contracts, you get bid on price, and we stand behind our performance. We regard our performance as something we place very high, and obviously in the deepwater environment, if you can't deliver a track record, if you can't deliver a reliable performance, you tend not to get invited to bid again. But pricing that into contracts is something that is just typically not done, and we think there's ample scope to do that.
But where is this cost increase that we're talking about coming from? I mean, if technology is improving and the capabilities are good and the projects are better understood, where is the cost increase coming from that's driving the higher prices?
Well, I mean, take one example, which is take the North Sea. The North Sea, we used to have uptime in our production here in the 80-90% a decade ago. We have an uptime today of about 60%. And a lot of that is due to lack of investment, lack of foresight in doing upfront taking care of the integrity issues. And so the entire cost structure in the North Sea is 40% of the uptime could have been burdened with some of the operating costs. Take another example, the delivery of a lot of the capital projects. I think the fact that we tolerate increases is at the end of the day paid for by the industry. Mm-hmm. When you have a project which starts at $1 billion, ends up at $2 billion. In many cases, it's because you haven't planned it well, you didn't understand what is required, you didn't have early development work effectively, or you didn't execute well in terms of your contracting philosophy. I genuinely believe that for the next few years at least, the big opportunity for all of us is to take that, to make operational performance and operational excellence in the industry the thing that is going to drive a bit more efficiency. And as I said, when we've had industries that did not have the same amount of rent, they were driven to this. So, I take the airline industry because very few airlines make money. They have to have an availability that is, 99.9%. And they have to watch pennies, whether they don't give you a hot meal, they give you peanuts, and things like that. But this is where we have to go. We have to drive for fantastic uptime. We have to drive for excellent execution. But I'm saying that the reason I'm worried is I'm saying all this needs to be done against the background where the challenge is increasing and the capacity and the capability in the industry is at best staying flat. And that's really where I think this is going to be a great challenge for us to be able to achieve.
Well, talking broader sense about the industry in general, in the past meetings we used to sit here and talk about Iraq coming up and delivering 9 million barrels, 10 million barrels, and of course Libya was not a problem a few years ago, and we see difficulties in Venezuela and Nigeria and so on. When you look at the overall industry, where do you see your level of activity picking up, geographically or section, or offshore? Where do you see the growth?
We actually, very supportive of having Mexico featured here. We have 4 integrated service contracts, and Mexico, we're producing about 25,000 barrels in these, but we're migrating these under the new reform. Now we're in the process of discussions with Pemex. But I see tremendous opportunities for Mexico. They have conventional oil in shallow offshore, which has the potential to increase their production quite significantly. But this is against the backdrop where their current production is declining. So, over the long term, as they get these licenses in round 1 and others, I think that Mexico has the potential to go from 2.5 to maybe 3.5, 4 million barrels. So that's an area where I think is exciting for us. The other areas that continue to be exciting are the Middle East. I mean, really, the commitment that Kuwait has made to go to 3.5 million barrels, the Abu Dhabi's made to also increase production, go to 3.5, Saudi to maintain production. I mean, that commitment is there. And we see that the investment plans are absolutely intact, and we continue to be, very excited about the potential there.
Franco, is Russia an opportunity? Is embargo a problem?
Well, generally speaking, let me tackle this generally first. We think there's a lot of potential in areas that we know very well, and maybe it's conventional potential, and maybe it's less challenged in terms of cost pressure. So we are very pleased about what we are finding in West Africa, as an example. We are enhancing what we do in Far East. We had the Indonesian discovery recently. We think there's a lot of basins that's worthwhile entering in Myanmar, in Vietnam. So there's a lot of spots to be looked for, also from a conventional perspective, and we think these can be also quite competitive for the long term. Russia, it's a difficult situation, still unclear in the sense that sanctions have been coming out, but clarifications are still pending. So what we are doing, and I think it's more or less the situation of all the companies that operate in Russia, what we are doing is basically trying to work out with our partner Rosneft what can and cannot be done and in which way, but it's still a process which is at least midway through.
Charles, there's a statistic I saw not so long ago about the bulk of the deep offshore, or offshore in general, is North Sea, Gulf of Mexico, and maybe offshore Brazil. Do you see any more deep water? Is East Africa going to be a major growth area? Is Southeast Asia an opportunity?
Absolutely. I mean, the golden triangle of Brazil, or offshore, in Latin America there, and Gulf of Mexico, and offshore Gulf of Guinea have been the drivers of the deep water developments. But there are other emerging plays, and East Africa. I mean, there's plenty of opportunity there. We have about 75% of our business is offshore, and about a third of our total business comes from deep water. And I still very much believe in that long-term thesis. I mean, obviously there'll be ups and downs in the oil price. I mean, that's the nature of our business. But as a general, in terms of where global production is going to come from over a 10-year cycle, the increasing amount from what we call deep water today, and obviously it's going deeper and deeper all the time, will naturally increase.
We have time for questions, so I'm just going to continue. But if anybody has any questions, I'd be happy to take them as we go. Oh, I see we do have questions. I guess if you would identify yourself and use the microphone, which is coming. And ask pointed questions, short but pointed, that helps.
Pierre-René Boukis, Professor of Oil and Gas Economics. You pointed very clearly all the challenge for the contractors. Now there is an elephant in the room, which is not the interface between the contractor and the oil company, but within the oil company structures. There is something wrong, and I will ask the ENI representative. Elephant in the room, Kashagan. We spend 10 times the budget. We start, the pipeline was laid, I think, under ENI supervision, is leaking on more than 50% of the wells. Where do you see the fault? Is it because the structure, the top structure was completely wrong, or is it an execution problem?
Okay, well, I think the fair thing to say is that Kashagan is a bit of an exception in the industry, meaning I cannot think of any other project with the same level of extremely high technical complexity. And this is managed by a consortium which has the most powerful IOCs within it, so I guess this is a fair question for the consortium, not just for ENI. But I guess Kashagan in a way is an example of things where the industry has to improve, generally speaking. And I would refer to what I was saying earlier in terms of, regaining and investing even more in building competencies so that, especially in the initial phases, the projects can be planned and engineered properly.
We go to another question, but I just want to say about Kashagan that it is, if you want to fault something or somebody, it's a fault of the whole industry.
I agree.
Because
totally
you
agree.
had the top companies represented.
I agree.
And if they couldn't collectively cooperate, then it's an industry problem.
I absolutely agree. I mean, the technical difficulty, this is the point I was raising earlier about the competency to challenge more and more difficult projects. Kashagan was a project which was very, very challenging for the entire industry. So I'm not trying to defend the NI, but the point I was trying to say is we're going to face this over and over again. You know, why did we have Macondo? You know, why did we have issues with drilling in Alaska for, you know, another big major, which was, you know, we're going to have problems with drilling in the Arctic. These issues are going to face us all the time because we are pushing the boundary on where we are going and what we're doing. And this is the point that I was talking about earlier, that as an industry, collectively, as service companies and oil companies, we are challenged.
Any other questions? This is what you're hearing here is what it feels like to be on the roller coaster going up and down as opposed to being the spectator.
Thank you. Nicholas Anzinger, Hertie School of Governance. You talked about cost overruns in the industry. There are studies that show that this is also happening in the IT sector, in infrastructure, or in hydropower. So is it rather something about big projects and not the industry specifically?
Would you like to handle that, Ayman?
Well, I mean, probably, I think, look, what's happened before is the size of the projects in the oil and gas industry are increasing because of the increased level of difficulty and complexity. So, you know, today many companies can deliver a project which is $500 or $1 billion. When you get into a multi-billion-dollar and you have increased complexity, this is where we're facing many challenges. But, you know, we have to wake up to the fact that the projects are only going to get more complex and they're going to get more expensive. So we have to gear up. And this is part of the competency I was talking about, that our project management, our project execution capacity and capability has to match the requirement of what's needed in the years to come.
Any other comments?
Well, I would still argue that the incentive structures need to be looked at too, because you know, a lot of these big projects, EPC type projects, are time and materials, and you know, that risk reward is not necessarily shared, you know, equitably between, or however you define equitably between the customer and the provider. And I think that's true not just in our industry, but by and large. But often it comes down to that interface between the two and the incentive structures.
Yeah. Franco, did you want?
No, I think there's a point in the fact that collectively execution, generally speaking, of big projects seems to become harder and harder. I think what Ayman says is true, meaning technological difficulty is increasing. If I have to add maybe one thing, thinking about what we are doing, there's also an element of fragmentation, meaning it becomes more and more difficult if the chain that assembles the project, like if you think in our case, the IOCs, prime contractors, subcontractors, contractors that control other contractors, suppliers of materials, supplier of equipment. The chain is becoming more and more fragmented. Pulling the chain together is becoming more and more complicated. This is why we are insisting on rebuilding some competencies internally.
Well, let's take a case in point, just to talk a little further. You mentioned East Africa deep offshore gas. How is that going to be managed? Is that floating LNG? Is that a sour gas? Is that high pressure?
I'm not really up to date. I think the gas is very clean gas, very dry, so not a lot of technical difficulties there. The productivity from a geological standpoint is very high, so let's say subsurface is unlikely to be a problem. Regarding development, I'm not really up to date, but I think it's going to be a combination. So both some floaters and some land-based plants.
But we must be talking about multi-billion-dollar
definitely
investments.
This is over a time horizon of decades, meaning the resource, if you combine Area 4 where we operate with Area 1 where Anadarko operates, and some of the layers are straddling, the resource is such a size that this is, you know, game-changing for the whole country and for the basin as well. We are looking into decades of developments.
Charles, to talk another example, Brazil offshore. There were a lot of very ambitious numbers and very accelerated schedules. I guess it's fallen a little bit behind and over budget. How would you comment on that? How would you explain that?
Well, we were saying earlier that I think NOCs take a slightly different, longer term. I mean, they can afford to. It's a slightly different business model, or it is a different business model. I was there for the Rio Oil and Gas show about 4 weeks ago, and it was, I think, more upbeat there than I've seen in quite some time. I mean, the FPSOs are coming. There's I think a renewed emphasis on boosting production, to meet the upcoming demand. And actually, it was a very upbeat, feeling from the conference. Almost quite at odds with some other parts of the world, and I've seen that before in Brazil, as you do in some other places.
So they're far more optimistic than, say, what you sense
elsewhere at the
moment, perhaps.
I mean, yeah. I mean, right now, yes.
Yeah. Any other questions? I'm sure there's. Yes, please. Don't ask about the floor on oil prices.
Jim Washer, Energy Intelligence. The one word that's worried me a bit in this session is the word fast. Because you say this is a long-term industry, but it seems there's an incredible focus on getting projects to first oil or first gas incredibly quickly, and by trying to deliver a project 2 years early, normally you end up delivering a project 3 years late, followed by 5 years of pretty unsatisfactory production performance. And I appreciate you get cost recovery more quickly by having an aggressive schedule, but shouldn't the industry, given the increasing technical complexity you talk about, try and do things a little more slowly and think them through a bit more at the outset?
Interesting question. Fast doesn't mean breakneck speed. Fast means on time versus the time that were planned. So fast means no delay. It doesn't mean as fast as we can. It's true that part of the problems are also related in the let's say in the handover between the development and operations. This is a thing that I think we as an industry see in multiple occasions. To us, this is part of the competencies we need to insource back again. And I think that there are also lessons to be learned by some developments which maybe happen in more structured regimes. I'm thinking about Norway as an example. To an extent, because of the partnership, Kashagan is a case in point. There are structured approaches that can be applied. So I guess the industry is on a positive trend there. It's one of the areas under the spotlight, but there are solutions already, probably to be applied in a more widespread and systematic way, but there are ways to improve.
So can I just point to one additional challenge that we are all going to face, because you talked about East Africa. The other big trend that we see is pressure from all the governments around the world to increase local content. So we're not only seeing this shift of decline in capacity in the OECD countries in mature environments, but we're seeing a pressure for us to deliver projects in places around the world with talent that, frankly, in many cases does not exist. I just came yesterday from Turkmenistan. We delivered a big gas development, South Yoloton, and our biggest challenge was we had to train 11,000 Turkmens to be involved in a $4 billion development to supply gas to China. When you talk about the East African developments, you're working in places like Mozambique or Tanzania, where there is no talent. There's been no oil and gas industry at all. So the ENI and Anadarko and the service companies are going to have to face up to the challenge that they have to create this talent, and they have to use new people who probably have fantastic work ethics and have the desire and so on, but there's very, very little experience. And against that, we're having to face the issue of meeting those very challenging projects, on time, on budget. So it creates a very, very big dilemma and challenge for the industry as a whole.
But if I could also just back on that point, I think in terms of lessons learned within industry, I mean, there are ways that we certainly see in dealing with some of the independents versus, say, some of the IOCs, that, for example, early production facilities, they can go a long way to de-risking the full-scale production down the line. But there are certainly some of our clients that make extensive use of them. Early on, they get the cash flow early, and it tends to be, in many cases, some of the smaller independents. But then they can use that knowledge to right-size their production facilities, de-risk that further down the line. And to me, I think that's certainly one of the lessons learned, that actually gets you production earlier and de-risks the long-term project development. But many of the bigger players in the industry make either don't use that those technologies, or make very little use of them.
Well, we're just about run out of time. I want to just thank the panel for their insights. I'm sure you have a lot of more questions. You can always catch them after the session. And with that, I'll yield it back to you. Thank you.
Thank you very much.